Hey guys, Mike here. So today we're going to talk about SoFi stock, any news that came out, the chart. Did we finally bottom at $7.89? Are we going back and revisiting that? And talk about really quickly what's going on with traditional banks, what they're doing in a way to kind of manipulating SoFi because they can, right? Because they've been around a long time. They have their analysts that doing their thing, but it is kind of funny to me how traditional banks are giving SoFi these downgrades while other analysts aren't, and so that's interesting to see. And that's one of the things I'll show you that sent the stock down quite a bit last week. And, more importantly, what's going on with the student loan moratorium and what does the CEO have to say to the president and really Congress in general. And I'm going to show you, he wrote a great article. We're going to I'll summarize that for you a little bit and show you what's going on with his Twitter account, because it's funny to see how things just take flight, But it really is a big deal, okay? And a lot of people are brushing that off, saying, student loans, whatever. It's not a big deal, but it is a big deal for the company, and that's the reason why he wrote the article, because he knows that. And I'm also going to show you the difference between, you'll see people saying that, insiders are buying. I'll show you the ones you need to look for and the ones you don't need to look for, and I'll actually show you the SEC filing to show you the difference and why one is good and then one really don't make a difference, okay? So if you're getting out of it, hit the like, subscribe for me, notifications all. I really do appreciate that, guys. And let's go ahead and get into the chart and kind of see where we're at and maybe where we're going. And so obviously looking at the chart, it's been on this, downward trend for quite a while now. And, we're really nowhere near even breaking above it at this point in time. But the key is, like I said last week, what happened when we broke below 10? So if we go below 10, man, there's no kind of support levels. And boy, it dropped fast to $7.89 in a matter of a couple of days. And so obviously with the market come back up, it got a nice boost to come back up, but still, way down and a long way to go. But the key is it's right there, that $10 mark. I think it's like $9.89. The key to me is you got to get above that 10, start consolidating somewhere above that to build a new support level, and then move up. That's what I would be happy with, honestly, because if you get these parabolic moves up, it's going to come back down. You almost guarantee it, right? That's a 26% move right there in 6 days. But I don't want to go straight up because we're going to come straight down. Let's just start building out and consolidating. Anywhere above 10 will be great. And if you look right here, what really happened last week is you can see here on TipRanks, Morgan Stanley came out, downgraded the stock to a hold, put a $10 price target on it. I think they had 20 before. So cut that in half, right? And then, of course, as soon as that news came out, boom. And if you just look at really traditional banks, whether it's Bank of America or any of the rest of them, Wells Fargo, what they're putting as far as their analysts are putting on SoFi, it's not good versus, other people who don't work for the traditional banks, who obviously SoFi is competing with. Going into the purchases here, you can do this right here on TipRanks, insider trading. You'll see where it says uninformative buy and then informative buy, right? So if we click on an uninformative buy, which I think right over here, you'll see one at the top there. And you can see right there, if you can make this out, we go down to the bottom. You don't see a P, right? So there was no purchases. And if you go down to the bottom, it says explanation of responses, restricted stock units converted into common stock on a 1-for-1 basis, right? So there's a stock they were issued, they're converting it to common shares, and then what they're doing is selling a bunch of it just to cover the taxes on this taxable event that they're doing here. But there's not like they took their money and actually just purchased this outright, okay? And to show you the difference here, if you see this, an informative buy, and what happened? You see the P, right? That stands for purchase. And he actually, sat there and he bought 58,000 shares. And so, you go to the bottom, it says reported transactions were executed in multiple trades. The purchase price was $8.83, reported in column, blah, 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 for 58,000 shares. He's done this multiple times now, and the range is anywhere from 870 to 894 on this purchase. And so it's just a big difference. But like what Anthony Noto is doing is he, for the most part, he's actually using his own cash to buy the stock because he knows he has to put something out there to try to stop the bleeding, right? I said that last week. That's what he's still doing. He just executed the same thing in one of the SEC filings, which is where he had restricted stock, it vests, and then he goes and converts it into 1-for-1 shares. He sells some of it to cover the taxes on it and all that good stuff. But then in the same SEC filing, he uses his own money to actually purchase more stock. And so, down the line, and obviously he's a smart guy. It's not only to stop the bleeding and lead by example. He's actually sitting there and making a good investment for him, because he pretty much knows in his head he's buying for $8.50. 5 years down the line, that stock's going to be worth way more. Okay, he's a Goldman Sachs guy. Don't forget, right? I mean, he's a smart guy. And so, even last week during the fallout, when all stocks were going down, including Sofi, you even saw, one of the guys on here talking about, hey, look at Sofi. If you look at all these other, fintechs, which are making a nice comeback last week, check out Sofi.
You look at Sofi now; it's down 45% pretty recently. So the chart doesn't look dissimilar to a Square chart, but the problem is it has not bottomed yet, as Square has. So if on the risk curve, this is definitely a riskier name, but you have a lot less downside to worry about if you wanted to dabble in Sofi as well.
And of course, what he didn't realize was, at that point in time, it had already bottomed, because it had already gone down to $7.89. For now, is that the permanent bottom? We don't know, right? And in a market like this, when you're in a quantitative tightening phase going on in the market, you just don't know, because everybody expected a huge sell-off when the interest rate hike was announced, because that's what happened in every other first interest rate hike. Instead, we go through this major 3-day run, even on quad witching, which is crazy to make that big move with all those options expiring. And so, everybody's still kind of like, oh my God. And so we'll see, right? But if all the other fintechs keep moving up, right, they're going to move up too. And like I said, that's why for me, it's getting over 10, consolidating up there, building another base, building another support level, okay? That's why I'm big on that. And so, the big elephant in the room though for Sofi, unlike the other fintechs, is the student loan moratorium, right, which is supposed to end on May 1st. And if you just type it in Google, you'll see what comes up here. It comes out and says private lenders lobby to restart federal loan payments. You got the moratorium on repaying federal direct student loans may end up getting extended. Student loan moratorium could get extended again. And so this keeps on going on. And this right here is pretty interesting. And this come out on March 17th, where federal student loan payment moratorium quietly extended. And I was like, what does that mean? It's supposed to end on May 1st. And it says, the Education Department recently emailed unusual guidance to the companies that manage its $1.6 trillion student loan portfolio, throwing that timing into doubt. And it says, what they told them was, don't reach out to borrowers about that May 1 deadline, the guidance said. And that leads us into Anthony Noto. And so what he does is he writes this long article, and this is recommendations for President Biden. And the reason why it's a big deal for him, because if I'm not mistaken, on the 2021 financials, the end of the year last year, they had over like $4 billion in student loan originations. And so that's a whole lot, right? And so I think the average student loan is around $50,000 if you average them out per client. And so, that's a lot of money, right? And so he wrote this article. And basically what he's saying is, and I agree with him, honestly, forget throw the politics out of this. What I'm looking at is, he's saying, you're throwing this blanket moratorium over everybody. Like, everybody can't afford to pay their student loans. And that's just not true. And so that needs to stop. And you need to go with a more targeted approach. There are people out there, yes, that are hurting. There's no way they're going to afford those student loan repayments, right? They're having fun just trying to pay the rent, for the groceries now, for gas, all these, and inflation really is hurting a lot of people. And so you need to target them. You need to follow through with your promise about a $10,000 forgiveness on loans. You need to give them a 90-day grace period, so no late payments will go towards their credit or anything like that. Stuff like that for people who really need it. And I can't argue with that, right? I mean, I don't know anybody could. And so, I have a whole different argument against student loans, which I won't get into now. And so, that's what he's saying. And so then you go back over to his Twitter account, and then it starts to get political with the replies, right? And so you can see he points down and says, at POTUS, right? And it says, administration is buying boats, and it's unethical. And then somebody else said, well, at POTUS, do the right thing. Don't do it for re-elections. Of course, Anthony was pointing down. And so, then this one goes on, kind of says basically the same thing about pandering for votes and stuff like that. You can see it went from, but if the CEO is sitting there writing this, saying this is what you need to do, this is what we really suggest, if he's going to take the time to write that, he knows it's a big deal. He knows this cannot get extended, especially forever, okay? And so that's a big one, because if that does come out and they get extended, oh my goodness. Just wait for the downgrades to come flying through, because they do have a lot of student loans on the books, if I remember correctly. I looked at the financials. But, two things that, I'm obviously looking forward to that people need to pay attention to with this company going forward, besides what happens to student loans, is obviously can they continue this membership growth that they've been on. I mean, they've absolutely just been killing it in membership growth, but in order for them to be profitable when they want to be profitable, they're going to have to continue that. And the other one is, you know, them being the AWS of fintech, right? And with these two purchases of these two companies, I found this on the internet, and the way it describes it perfectly, this is what we have to look forward to if they can pull this off. And it goes on to say these two companies that they purchased will enable any company to provide any banking service they want without having to invest a penny in creating any aspect of the backbone processes in a frictionless way. Currently, Galileo offers APIs for creating debit cards, bank accounts, amongst other things. That made it extremely easy for neobanks to adopt and set up their own banking services. Soon, the Technisys core, it'll be able to offer credit cards, etc. It'll enable traditional regional banks to digitize themselves without having to hire any technical staff, etc. Which of course will be enormous, you know, for these other clients coming on. I mean, if you don't have to hire staff and training and offer benefits and all this other stuff, and you just go through this other company to do it, you know, that will be huge for them, but also for Sofi, right? Not just a B2C type of company, a B2B as well. And so that's the stuff they can pull off. Plus, these two companies help them save, you know, millions, if not billions of dollars. And so every year. And so that's the stuff to look forward to if they can pull it off, of course, is the big thing. You know, another thing I look at too is, to me, how they're not a takeover target, I don't even know. And when I see these downgrades or anything coming out from these traditional banks who are way behind the times, right, then I can absolutely see them, I hate to say it, manipulating the price down of Sofi so they can get the company for cheaper, right? I mean, think about that. That's smart business. It's not right. But it would be smart business. It would be the first time they've done that, you know. And so, you know, let me know in the comments what you think about that. But I mean, that's just something to look forward to. But the thing on the block right now is what's going on with student loans. That's the big thing. And so, you know, we got to May 1st. Maybe Biden and the rest of them up there will make up their mind and figure out what they're going to do. You know, hope you got something out of that. It kind of gets us up to date. You know, let me know in the comments what you're doing with Sofi. Did you pick it up under 10? All that good stuff. Watch that $10 level. That is key going into this week right here. And I think this week's going to set us up to know really which direction we are going in the market and for a lot of stocks just like this. So hope you have a good day, and I will see you tomorrow.